good morning, good afternoon, good evening, good day from wherever you're watching this. This is brought to you proudly by Just to Trade Stock Brokerage Company. So, guys, today we're going to tackle a very simple and very interesting topic. The topic for today's discussion is how does the stock market make you profit, or simply how to make profit on the stock market. So, guys, stay tuned. We're going to go through a very brief and simple discussion, and we believe by the time we end this video, you would have the basic concept, the understanding, and then the mechanisms behind making profits on the stock market. All right, so the first question comes in: what is profit? Okay, let's ask Google. I believe Google has something very interesting for us. Okay, great. So here we have it. Profit is a financial gain, especially the difference between the amount earned and the amount spent in buying, operating, or producing something. So we have some synonyms here. We say gain, we can see returns, perfect, payback, and whoa, we have dividends here, interest, yield, surplus, excess, right? So you gaining excess in something you did earlier, right? So that means it gives you an earning, it gives you additional plus, right? Okay, guys, so basically people also ask these questions: why at all do you make investments? Why at all do we make investments? So, guys, the answer is very simple and straightforward. We make investments to make money, to make profit. No one makes investments thinking they are going to lose or expecting that they lose. So, the main idea, the main driving force why people invest is to make profits, to make money. All right. So, we're going to discuss. Um, there are two ways of making profit on the stock market, right? Through dividends and then through stock growth. But on today's episode, we are going to discuss how to make profit through dividends, right? Okay, so we're going to check some definitions here. Maybe we can do, you can use Investopedia. Let's check what Investopedia has for us. Okay. hmm So dividends. All right. Let's see what Investopedia has for us. Okay, so here we have it, guys. It says a dividend. Sorry. Okay, it says a dividend is a distribution of a portion of a company's earning. A distribution of a portion of a company's earning decided by the board of directors. The purpose of dividends is to return wealth back to the shareholders of the company. There are two main types of dividends: the cash and the stock dividend. So we're going to talk about that briefly very soon, the difference, the main types of dividends, the cash and stock. But now we're going to break it down and then understand how dividends makes us profit. What exactly is dividends? So in my simple way or my basic terms, I'm going to say dividend is basically a thank you card a company gives to its shareholders, but it's in form of cash or stock like we've seen, or let's say in simple terms a card with money in it. So it's basically the distribution of profit by a corporation to its shareholders. The fact that you have a say, I mean, you have a share, I mean, you hold some shares in a particular company, you are entitled to dividends if the company gives dividends. Guys, take note here, not all companies give dividends. Yes, not all companies give dividends. So, if you want dividends, you should relax and then research about stocks or shares that pay dividends. Some companies or some shares don't pay dividends. Right. So making it easier, making it clearer, what I can say is that, for example, you are investing in a company A, right? And company A is saying, all right, friend, thank you very much for holding a share in the company, right? So just take something small, take this, I'm paying you, and then it's a thank you. I mean, I'm saying thank you for holding a share in the company. So, guys, it adds up, it brings an increment, right? Just like how we can see here, right? Good. So, let's explain further, right, what dividends are. So let's go to investing.com, and then we're going to discuss using the stock chart. Okay, so here we have it. Right. So we're going to discuss a list of stocks here. And hey, we have the first one, Apple. Apple stock. So we're going to discuss Apple stock, Apple Incorporated in the United States on the Nasdaq market. All right, great. So as I was saying, the company Apple decides, because I have a share, I decide to buy Apple. I decide to invest in Apple. And Apple says, hey, I'm paying you some amount of money. For example, let's say $1.2 or let's say $1 for holding on to a stock for a period of time. So guys, as you can see here, you can see some circles here, green circles with D, right? So this is the chart for Apple, and then you can see that it closed at, when the market closed, Apple was $499, $499.23. So if you scroll back, you can still see the signs here, right? These signs here. Okay, so basically these signs and these letters indicate that dividends were paid to clients who hold shares in Apple. So you can see here, if you put your mouse on it, the payment date for the dividends was on August 13th. Yes, so August 13th, 2020, they were paid some dividends. So this actually has brought extra onto their account because they hold onto this stock, right? Good. And let's see if BAB Alibaba had dividends paid. No, guys. So as I was saying, not all stocks pay dividends. So you can see here, there is nothing to show that dividends were paid. Let's try the third. The third as well, guys, was not paid, right? That is Twitter. All right, so we have the international business machines still in the US. Yes, guys. So you can see dividends were paid here, and then they have their dividends dates. That was on the 10th of June 2020. So their last dividends that were paid was on, okay, so that was September 10th, 2020. That is the expected date of it to be paid. So they will be paying the next dividends on September 10th, 2020, an amount of 1.63. So guys, the more the shares you have, that is the more dividends you're going to be paid, right? So imagine if you have about 500, or let's say 500 shares of Apple. So per dividends, which is stated there 1.63 on this expected date, more, I mean, they'll be calculated and then be paid to you. So we're going to just talk. So basically, that is it. Some dividends are paid quarterly, some are paid monthly. So it depends on the share you are investing in. You can also calculate your dividend yield for the year in percentage, right? So for the dividend yield, it's basically the thank you amount, that is, like I said, the thank you amount, that is the dividend over the price per share, right? Good. So that is it. So we're going to talk about the difference between the stock dividends and the cash dividends. So for the cash dividends are paid to shareholders when a company decides not to use the money for operations, but instead transfer economic value to its shareholders. So for the cash dividends, it provides income, but then shareholders must pay tax. Right, good. So the difference between the stock dividends is that the difference between the stock dividends from the cash dividends is that the stock dividends gives new shares to its stockholders. So for example, let's say if Apple decides to give stock dividends. Let's say if you have 100 stocks of, 100 shares of Apple, right? Apple will decide to give you extra, let's say for example, 50. Now you have 150. So you decide what to do with the shares that have been given to you to gain your profit. You can either decide to just sell it right away and then get money and then get additional money in your account, or you can decide to keep the stock, the shares that have been given to you, for it to grow further. Then you can sell them at the right price that you feel is good. Then you can make good profit on your account. So guys, that is it for today. We spoke about how to make profit on the market with dividends. So as I said earlier, you don't just go for any stock. You have to go for stocks Just like how we saw here, Apple, we saw that Alibaba Group Holdings doesn't give dividends, Twitter doesn't give dividends. We saw that international business gives dividends, and Bank of America also gives dividends. Right, good. So you can all see here, Coca-Cola also gives dividends. Not all companies, I say, give dividends. So that is it, guys. Dividends as a way of making profit on the stock market. Right. So stay tuned. We'll come your way once again with how to make profit on the stock market with regards to capital growth. That is the growth of the stock that you have invested in. Okay, guys, thank you and all the best. Bye bye.